Good afternoon. We are going to be talking about a company called Alcoa. The important thing is that everyone understands that Alcoa starts today's full earnings season for July 11th, 2011. We had ran in to extreme highs in all of the indexes going into this earnings season. The earnings season that is upon us here and now, MMTs, is the following. We got over here when we were oversold, it was time to be a buyer. When we were up here, it was time to be a seller because we're overbought. Like I said, when we started the earnings season, if we go into earnings season overbought because we already rallied 10 days, it's going to be one heck of an earnings season. And our analysis on this earnings season is that depending on what the CEOs have to say as to what their forward-looking outlook on this economy, the debt ceiling, are they going to mention anything about Greece? Are they going to mention anything about Italy? They will. What about Spain and Portugal? The thing about it is the combination of the S&P 500 earnings, the Dow 30 earnings, the NASDAQ comp earnings is that equity prices have ran extremely high from a very deep oversold to a very overbought process in a 10-day period. We had called for a correction last Friday or Thursday. We said we're overbought, and the rally had to have a pullback now. So basically what we're going to be looking for on the conference call is what their operating margins are, their EPS earnings per share margins are, the forward-looking guidance, okay? Depending on what some of the companies are is going to be the operating margins, okay, in the last quarter. The other thing we're going to be looking for is in the last 90 days was that slow patch that we had gotten involved in. Now, with the unemployment number being at 9.2% and the U.S. not being settled on its debt ceiling, that leaves a negative bearish tone. Now, the earnings in general aren't going to be a collapse. We've had double-digit growth in earnings for 9 quarters in a row. Publicly traded corporations have executed outside of the U.S. extremely well. The problem is, though, Europe is very slow. So, that's going to affect a lot of these earnings is what Europe has to say. But, hey, they've been executing well in India and China. But let us not forget that India and China had a slowdown, too, in this last quarter. So this last 90 days is what they're going to report starting right now. Over the next 4 weeks, it'll be really loaded with earnings. The key is going to be the guidance. The guidance is going to be the key. Because at this price level in a lot of equities, we're overbought. It's going to take a very good report to make all-time highs in a lot of these names during the reporting session. The volatility will be extreme. The after-hours market, which we specialize in with our MMTs only, the public should not be involved in the after-hours market. It's too volatile and it's a very high risk. So therefore, by understanding what we do, we know how to minimize our risk and take advantage of the after-hours market during the earnings season. And that's exactly what we're going to be doing. So Alcoa is going to start it all out. Now, if Alcoa beats and guides up, well, then you'll have a big gap up tomorrow morning in the pre-market futures. On the other hand, if Alcoa misses, and they're going to talk about what different parts of the world where their slowdowns were, and every time we start earnings season, Alcoa kicks it off. And on our website, stockmarketfunding.com, over the weekend, we told all new MMT enrollees what to do and how to get involved with the companies that they like to trade in and what they had to do there. And everybody can go back and review that. It's going to take a good earnings report across the majority part of the board, across the board, in all sectors and indices. So if we come in good. We don't think that they're going to be that robust, by the way, and we think the guidances are going to be flat to down, and we think that the current environment here in the last 90-day period, as I said, it was a slow patch. We are going to monitor the inventory levels in publicly traded companies. If inventories are high level and they have to discount them, they have to discount it. We will be looking for these earnings as they start because the broader U.S. market, from this overbought reversal that we had called for, it's going to take a lot of good upside guidance to get these markets back to all-time highs. We do know that GDP was weak in the last quarter. Everything that we have talked about on our site, all the updates and the various different things that we talked about within bull and bear rallies, bull and bear economies, bull and bear earnings, it's all got a bull and bear effect to it. We will be taking advantage of this earnings season. However, we are priced to perfection in a lot of these names that ran up in those 10-day period starting 2 weeks ago. We had 10 trading days. Then the unemployment come out on Friday. We had a big down move, and we were overbought and needed this pullback. And with this pullback in every bull rally, 10-day bull rally, there's got to be a pullback. We said that last week, and we're finally getting one today. So, based on corporate earnings, for these markets to go higher, they're going to have to report above guidances and what their outlook is. Remember, in the retail sector and the restaurant sector, we're overbought in a lot of those stocks. The consumer had the high oil and gasoline and heating against them in the last quarter. And the contraction with small businesses, 64% of them are saying, I'm not hiring new people. Go check out the U.S. Commerce website. See for yourself. So, small businesses aren't hiring. That's not a good tone. The bottom line is the U.S. earnings, based on the U.S. consumer payroll and the U.S. consumer spending, that's going to be one piece of the earnings. The secondary piece, number B, is going to be international earnings. And how well these companies, particularly in the multinationals that we cover, that's on our homepage there, and the large cap, S&P 100, okay, and the technology sector, semiconductor sector, the financials, well, heck, they're just going to stay the same for the foreseeable future. Transports in the last quarter had a slower contraction level because of the slow soft patches. Now that gasoline and oil and some of the things and commodities have come down, but they still remain at elevated levels in our view because it's a huge tax on the consumer. Basically, for these markets not to sell off, the earnings this week, which is a very light week, but all of these other sectors that report, we're going to see how the street and Wall Street treats them. We'll be very diversified in every sector. We'll be very diversified in every indices. We'll be very diversified in looking at bear and bull ETFs. We'll be very diversified in every asset allocation model. And we'll take a look at the risk and reward ratios, bought and oversold areas. We will also incorporate the put to call ratio. As I said, the market was very complacent and very euphoric, and the indexes and individuals' names made their summer rally so far all the way up to the tops. And we already covered the indexes. Go look at them. Key is today, how will the volatility play out? We will be covering Alcoa in the after hours market. Welcome to the earnings season. The other thing is that the S&P earnings are valued about $95 per share across the board in the S&P 500. Are those earnings going to remain at that level, or are they going to be at a lower level? It's going to take the United States of America, their government, the government that we live under, to make the right kind of changes so that the U.S. consumer can move forward, and that gasoline prices and energy prices must come down, and that small businesses, I've got to change that view. 64% of them don't even want to hire any people. Why? Because they're fearful about what all of this economic and contagion fear is about, and it's put them on the sideline. The only way that unemployment's going to go higher, we need to move our corporations back over here. Not only that, we need to give the right incentives that's going to work. The other thing that we need to do is to make sure that everything is set for proactive business and free markets in the U.S., United States of America. We're going to leave it at that tone. And we're going to be very involved with our school people and our international people and everyone that visits us at stockmarketfunding.com. Every analysis that we do, every bull or bear trend is done before the fact, not afterwards. Every index, every sector, everything across the board is always done before the move, before it happens. We have a very good track record. You can go look and see for yourself. The truth always tells the truth, by the way. Look at the live videos and put in the effort. If you just happen to be an investor that's looking at it, you may want to scratch your head and start thinking a little bit. There are lots of things that are going on that is kept away from the general public. I can tell you one thing. We will make good of this earnings season, as we always do. We'll be looking for values that will come into play from the last 10-day rally. The ones that guide the quarter down will be getting net short, and ones that guide up and pull back and hold support and build new base will be getting net long. This is how the earnings season will work. We gave our analysis many times on our website. We don't have to go into it anymore. We did lots of training over the weekend and last week and the week before and the week before that. How markets are made in bear and bull. Bear and bull earnings, bear and bull economy, bear and bull worldwide markets. We're very diversified in those. Both long, both short, bear and bull.